Hi, this is Randy Fitting with Right Side of the Chart, and this is the early session update for Friday, October 27th, 2023. It is 11:17 a.m. Eastern Time, so I'm starting the video, so we're, a good hour and a half, almost 2 hours in the trading day. I just wanted to reiterate my thoughts. Nothing's changed. Still looking for a near-term bounce, at least, today, and quite possibly in the next week. As of this moment, I'll probably take home the longs. I told you last night I went home long, and here's some micro levels. If you want to, actively trade, go down to the 5-minute charts. You can see we put in, this is a 5-minute chart of QQQ, by the way. We put in a divergent low. Let me change my tool here. Divergent low, a little downtrend line break. That was yesterday. This is today's, this is where we closed yesterday. So there's the open, the gap up. So these are the levels, and we just punched here. So you had minor resistance here at 347.91, which just as I'm talking, start of the video, got taken out. So that should carry us up to the next level here, 349.76. 351, and then as of right now, if I can get it today, I'd be happy with a move up to this downtrend line right here. This one, let me show you, comes in with roughly 353. I know there's a lot of lines on here, but this one starts back here. What is that? The 17th, I think. Comes in, enough reactions there, and that would give us, today, that would mean, if you're just wondering where we'd be at if and when we get there, we'd be up about 3% if we get that. Actually, a little shy of there, I have a resistance of 353. I'd want to be out just under that. Be very happy to get that today and then get out, and then kind of reassess if and when we get there. So that's what I'm looking at. And there's potential for more, but let me do this. Let me again try to impress and clarify my thought process right now. Answer to reply this morning. Posted yesterday. I saw it this morning. Okay, the question was, it seems like we look ripe for a crash. And so here's my answer. So kind of shares my mindset here. Yes, the odds for a crash are higher now than any time in this year, all in 2023, in my opinion. However, from periods of elevated volatility and the recent steep declines in the market and leading stocks of, let me start over here. However, from periods of elevated volatility and recent steep declines in the market and leading stocks, which have also fallen hard, also come those occasional rip your face off counter trend short covering rallies. So therefore, one needs to be careful about positioning too short at the wrong time. And right now, we have numerous key stocks oversold and at key support levels with bullish divergences, so stay flexible. Remember, the odds being high for a big rally or a big drop in the market they're not the same as, that's not synonymous with the word certain drop or a crash or certain we must go down or up. In other words, it's never 100%, just an increased likelihood. So hopefully that makes sense. An increased likelihood means yes. However, what I'm doing, stated yesterday, and I like to do, and trying to thread the needle. So where I see, more downside in this market in the coming months to even years, I don't want to be short during a strong counter trend rally. And also, I'm going to get to the charts in a second, show you that just the RR is not there right now. We may go down. We could crash Monday. We could crash next week. Or we could also rip up and have that kind of rip your face off counter trend rally where you don't want to be short in that. So what I'm doing right now, and what I've been doing recently, I'm not taking this market week by week or month by month. I have my longer term views. I'm taking it day by day, especially my active trading account. So I went on to say this is before the market opens. Still favoring a bounce today, but we'll know soon enough. The market opens in 15 minutes. What I meant by that is, when you don't put too much into pre-market activity and futures and all that. The big boys always say step onto the playing field at 9:30 a.m. That's when institutions all can maneuver. There's liquidity. It's not, you don't have that in the pre-market session, especially on individual stocks. So, all right. So this is again micro levels. If you want to, look at it here, we put in a little divergent high. I just moved the line, but we already had a little divergent high, a little pullback, and I'm not trying to game this. Obviously we have support right here. I'd like to see that hold. If it goes a little deeper than that, this is probably your last chance. I mean, the previous lows are usually it, but to keep this thing intact, if you're trying to game it up, and you want to buy pullbacks because you want to buy yesterday, pullbacks to the downtrend line should contain. And if they don't, it's easy, guys. This is easy peasy. You take a shot on a pull if you're bullish and you expect things to go up, whether it's the stock market, whatever you're trading. Don't overthink it. Buy pullbacks to support. And in a market like this, if you don't want to get your head chopped off, just keep stops somewhat below there. You got to allow for little whipsaws, intra-period spikes, meaning intra-period means a 5-minute chart, which we're looking at here. The candle, prices may drop down to here, only to close the 5-minute candle back on or above the uptrend. That's what I mean by intra-period breaks. And again, intra-period is relative to the time frame. Now let's talk about that. So this is very short term. Let's jump out to the daily, and I'll try to keep this one short. Okay, so what do we have on the daily? Let me turn off all my lines for a second. We have the 200-day, as I mentioned yesterday, violated intraday, but I said that's more than common, and it's not like, okay, we're below the 200 exponential, market's going to crash. No, like I said, I'd be surprised. I was saying it before we got there, surprised, not shocked, but surprised if the market just goes right on through the 200s, both of them, that's simple, or the exponential and the simple that's below, and just keeps going. Normally, especially with the first drop, it's taken us from the highs 11% just to get here. It's a little bit different. What I mean by that, okay, let me just go over that and show you an alternative scenario. Let's just say, for example, now we hit it, we bounce, we come back, we go up a little and we hit it again. Better chance of breaking it there because we've already had that initial reaction. Again, it's Pavlov's dogs. The bell rings, the dogs salivate. They think they're going to get fed. There are more bulls inherently in the stock market at just about all points in time. And when there's not, that's when you want to be buying, when everybody's bearish. That think March of 2009, think COVID lows, all that kind of good stuff where everyone just thinks, that's it. Market's never going to go up. It's going to keep falling. That's time to really get longer term bullish. So anyways, they're going to buy here, and I'm not looking for a move to new highs. I can't rule it out yet, but it's not my preferred scenario. I'm just looking to game a bounce, and that bounce, well, let's talk about it. I gave you some targets right now on the 5-minute chart for today. Let's just also acknowledge it's Friday, it's a weekend, and so with the odds of a sudden swift move down in the market, i.e. a crash, mini crash, whatever you want to call it, it's just the RR, again, everything comes back to risk reward. It's not worth it. Even if the charts are constructive, even if we have a big green day today, and you see they'll march out the bull parade on CNBC and tell you how the market successfully defended their 200-day and blah, 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 blah. But again, RR, risk versus reward. So even if you have, some bullish price action today, you can't control what happens over the weekend, in addition to the geopolitical risk right now, and, both domestically and abroad, you have, of course, all the red flags and things I've been talking about in the stock market. So, so that's that. I just wanted to say, here's where we're at. So we hit T2 yesterday. We went a little bit, a hair below it, hair below the 200. But the fact that we've regained it now, no, not by much, but this is bullish as of this very second. Now, by the time the ink dries on this video and it's uploaded to YouTube and processed and sent out to you, things could change. We could have a big reversal intraday. But as of this very moment, why is that bullish? Well, two reasons. Number one, we undercut the 200. So for those that don't, kind of subscribe to my mindset of, hey, give it a little room, I'm sure there's some out there that either shorted the break of the 200 and or longs that capitulated and had their stops hit, said, oh, we're under the 200 exponential, I'm going to sell out. And that what that does, it clears out some weak-handed longs, also sucks in some short sellers whose plan was maybe to short a break of the 200, but now it's back above, so they have to now be concerned if they're not already stopped out. And remember, when a short seller covers his or her position, whether it's on a stop loss or a profit taken, doesn't matter, they're buying. That's what you do. You're it's trading in reverse. You sell first and you buy the shares after, and that puts buying pressure. So at this very moment, that's what you have. You have a little undercut. You also undercut support, my T2 second price target level, which was support, and now you're back above it. So as of this very moment, I see nothing but bullish price action today. All right, so that's that, number one. Apple, okay, again, covered yesterday. A perfect defense, intraday cut, but again, these are daily candles. All that matters is how you close. You close right above that 166.61 key purple support. Today, you opened up, again, a hair below it, and we're above it now. Check mark there. And there's a lot of, resistance coming up. So I'm going to put a downtrend line right here for you on Apple. And you could see, when you see something like that on the daily, you can see it a little better when you go down to the 60. There it is. There's your, you've got a little minor, shorter term downtrend line right there. Price resistance likely to come into play. But then if you pop that, then good chance Apple will run up here for that. Apple reports next Thursday, but gives it plenty of time to rally. And remember that Amazon, I was showing you Amazon trading in real time aftermarket, had an initial pop, then a drop, put it back down to the day lows in the after hour session, but we all know what happened. I'll get to in a second. And so what happened right now is Amazon kind of bucked the trend. So far, it's just been an ass whipping for every big tech that reported after earnings, no matter how decent, and there was nothing stellar. And I know there's some soft guidance and all that stuff, but Alphabet had its its biggest down day since the COVID, I think it was. But we'll get to that one in a second. So I just want to say here, we're looking at Apple 60-minute divergent low at support on the daily. Poor market action, bearish market action lately, and below the 200s again. But chances are we probably bounce back up there. So that's that. Again, you get Apple at support with positive divergence on the 60-minute chart. You're probably going to get a rally, even if it's just a bear market rally. Microsoft, I told you yesterday, I don't have much of an opinion on it because it's kind of just bouncing around. We put in a divergent high here on the 60. They faded the post-earnings pop, but it was one of the better earnings reports, and so now they're buying it back. I told you, what I said in the video yesterday and in my comments to the person that asked about my opinion. Is going to trade in line with the Qs, and that reflected yesterday's drop in the Qs. And now this reflects today's rally in the Qs. So this is almost an equal beta position. The ones I'll show you where I think there's more alpha, more chance of outperforming if we are going to bounce. And again, remember my analogy from a couple weeks ago, using that line from the movie Heat. If you don't get attached to anything you're not willing to walk away from in 30 seconds flat. If you feel the heat around the corner, and that means boom, I'll throw these longs away. They mean nothing to me. I don't ever. You trade long enough, and you learn to not become emotionally attached to stocks anymore, or any positions. What I mean by that, no matter how much you love the stock or the Bitcoin or the whatever you're trading, you just need to, like I said, if something doesn't smell right, feels right, or changes in the technicals, or you missed something you realize that you missed to begin with, and tells you to get out, then time to get out. So, all right, a couple more and we'll wrap it up. QQQ, I need to do something here. I need to reload it this way so my watch list populates. I already covered Microsoft. Here's Alphabet. Alphabet still at this one, I think, again, if we are going to bounce. If they could sell this rally, as I told you, by the time you get this video, they could dump this market, take out the lows, and we could see a big washout and a 3% down day today, even though we're up 1%. But this one is still one of my favorites because it hasn't gone yet. Now you might say, well, what's wrong? But you are, got the snot knocked out of it after earnings, right down to the 200. So far, they've defended the 200 like a champ yesterday and today, and we're still above it. And this major support resistance zone down here as well. So I think there's, between this and let's say Amazon, who's even up today, one of the strongest ones, I would be long this. I don't like Meta. I'll show you why in a second, but this one I think if we can get a rally here, especially if the rally carries into next week, that's a big giant if. But if it does, where to? Well, you got a big old gap that they'll probably want to at least backfill right there. So that means take up the top of the gap and quite possibly back to this key level that was key support right there, 127.15. If so, you know, I mentioned as a buy here at the right at lows at the low of the support zone 120, 132 yesterday, and that would be about a 5% pop. Nothing big, but it'd be quick. Get in, get out. I'm not looking again. I think there's a lot more downside to come. I'm trying to thread the needle and just maybe, you know, sidestep a get back on shorts, plus turn around and profit on a little long side bounce if possible. If I don't end up throwing this this hand away before then. Amazon played out. Remember, I played the little earnings guessing game, and this one figured would actually hold up because you had yesterday a drop down to both the uptrend line and it's right below it. You can't even see it because this blue line here is the 200-day simple moving average. It comes in perfectly with the uptrend line, so dual support. Hit it yesterday at the lows, did it with a positive divergence in place, and boom, this one is certainly bucking the trend, you know, up 10%, however, 10% right into downtrend line resistance. So if you took it yesterday, I mentioned that if you wanted to gamble and take it before earnings, I'd be selling here. You can, you know, sometimes I will, you know, if I think something's going to go up, instead of taking profits, I'll just put a real tight stop in case it does a reverse, and that gives it room to run. But no, this thing's right at downtrend line resistance with price resistance overhead as well. So, and even if it does go up, I mean, if you make 10% in one day, get out. Take profits on that. That's what swing and active trading is all about. You do that just once a month, you're making 120% of your non-compounded. Now, again, it's not that it's always going to be that easy, but so anyways, that's it. Amazon's at resistance. Nvidia is still above support. So again, unless this level goes, and if it does, boom, your next support's down here, 375, and then the uptrend line and the 200 days, a massive confluence of support. Meta doesn't look like much here, but I'll show you what I have on the 60, and I'll replicate it here. I have a trend line right here, right there. Boom, back test. So here it is on the 60. So here's one that you know, you can short. Meta was bearish going in earnings, had a clearly bearish chart, went down after earnings, broke down, you know, or reverse, went down after earnings, I should say, and now it's currently back testing confluence. Dual resistance level, both price. You know, this is a level I've had on this chart for created that back on August 7th, that line 298, and it's rallied right back to there, and then the uptrend line. So intersecting resistance. Now, of course, the way it works is, you know, if you want to take a shot at a short here, it's completely objective, and I would target, you know, this next target here, 276.41 at minimum. And you can put a stop somewhat above, because if it pops that level, then they probably want to run it up. I'll give you another micro level if you are trading it, and you'll most likely, I should say, have a reaction if and when it gets to 306.60 right there. And that's about it. I could go through each and every one, but that's not the point of this video. You know, the point of the video is kind of just show you if you want to take it minute by minute. You know, keep an eye on this 5-minute chart. You had the Virgin High earlier. It played out for a little correction, pulled back to support. This divergence on the 5 has been extended. So what I think will happen and what I want to see happen, I told you a lot of times I'll, you know, swing the 5-minute charts, but there's some more significant developments that I just spent most of the video going over. A lot of key stocks pulling back to or even slightly undercutting and then recovering key support levels such as the 200-day moving averages or price support. So therefore, what you want to see if you are trading this thing long, and I think we'll probably see, is burn through these divergences. Again, we already had one correction, tradable pullback off that first divergent high, but if we can power through here, and just from the look of it, usually when you see the divergence looking like this, if PPO keeps making higher highs, they want to probably push this market up. So I think today, this morning, you've seen a little back and forth. Market felt a little heavy earlier, and that's, still a lot of people now spooked. I haven't turned on Bubble TV in the last couple days, but I'm sure they're marched, in the last 2 days, they probably marched out the bear brigade and telling you why you want to short the market, why it's going to crash. And, again, I think maybe, odds are good for crash. just not today. And probably not next week. You got Apple coming up, and we could see a pretty good rally until then. So, the target again, here's that downtrend line right there. What did I already tell you? I'll have to measure from today's open, let's just say. So, and that was right there, 353. So yeah, when we get up if we get up around 2.8% or so, maybe hair below that, if we get that today, I think that'd be a nice place to maybe book some quick profits and then go home light to the weekend. That's, at the end of the day, that's kind of what I'm trying to convey to you. It's the RR. The odds for a sudden move down in the market are elevated. You got problems going on with the banks I've highlighted, financials, regionals, big banks, you name it. I can go on and on. Super high interest rates that are going to break this economy. Undoubtedly, it's just how long's the lag effect going to be, blah, blah, blah. So you have those elevated odds of this, but you also have the elevated odds right now of this. That the institutions and people come in and buy, and they say, man, I can buy Apple today and Amazon. I can buy Apple, the crowd favorite. It's 16% cheaper than I could have bought it a few months ago, and I can buy it, in close proximity to the 200-day moving averages, et cetera, et cetera, et cetera. So the risks are bilateral. Guess what I'm trying to tell you. That we can, over the next week or so, pop up. And if we do, I'll tell you, these are good reload points. That's going to firm up the divergence. And again, if and when we even get up there, I'll give you my thoughts then. And we might not. We might not even get there. This market's still pretty heavy right now. I'm watching, we're not ripping. We're breaking these little support levels in the last couple of days on the short-term chart. This is what I look for. This is where we should have run today when we popped that, but we didn't. See, there weren't a lot of buyers on the other side of it. We are zigzagging up at the end of the day. Don't read too much into it. Right now, there's a near-term uptrend in play, very near-term since yesterday's lows, but that's coming off a longer-term or intermediate-term downtrend. So, all right, where my thoughts are, kind of what I'm looking for today. And then at the end of the day, like I said, unless you like gambling, Vegas is your thing, sports betting, and taking pot shots at the market. You can go home heavy, long, or short. You're either going to be very happy or very disappointed come Monday. We'll probably gap up or down one way, it'd be my guess. So, I think depending on where we're at today, as of this very point in time, I'm leaning towards going home with a mild net long exposure again, just kind of based on everything I covered earlier, these key support levels. And the fact Apple's reporting next week, that's going to keep the short sellers a little bit at bay right now. They probably got emboldened recently with most of these big market, big tech stocks getting whacked down. But Amazon, I'm sure, roasted a few of them that tried to position short, thinking that trend was going to continue. Again, Amazon, you also have to think of it this way, and this is what I think of. A lot of this move down in the last week or so was just purely in sympathy with the other big FANGs or Mag 7 stocks getting beat up after earnings. So in other words, Amazon, a lot of what would have been bad news for Amazon, even had it gone the other way, was already priced in. Maybe not all of it if they really had a bad earnings report, but you can see what happens. So that's why the RR, as I mentioned yesterday, was favorable to be long and bullish into earnings, and that's what happened. So, all right, I will stop the video here. Nothing's changed. Still, like treasuries look like more of a swing or trend position right now. Nothing crazy, but it also would help. Helps to diversify as well against equity positions. Nat gas continues to work its way up. I made a reply to somebody, a couple questions in there lately. I just didn't want to get off topic on this video if I start going into nat gas and I cover crude and grains and all that other stuff. So let's just leave it here at the markets. And I'll most likely do one more update, whether it's just individual charts or another video later today, because like I said, things are moving right now. And yeah, and this is when traders can really earn their money or make some money when volatility spikes up, if you're on top of things. And if you're new to this and you're not, I've kind of conveyed that the risks right now are somewhat bilateral. And so what that means, if you're somewhat risk averse or don't know what you're doing, it's not a bad time to kind of sit back, put your money in that 5.5% money market account, or maybe just take a little bit if you want to kind of get your feet wet, but small positions, nothing big. It's just not worth it. And again, unless you're a huge risk taker. All right, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.